dude and dudettes. It's John, your stay-at-home designer. And today we're going to cover some closing and opening trades. And like we said, we're here to democratize our own personal finance. We want to make sure that we have control instead of letting everyone else pull our strings for us. So let's get started. Today, the closing trade here, we actually hit a 50% profit target, which is our typical and traditional target. Wells Fargo is the ticker, WFC. And we ended up actually being quite a ways in that trade. It took about 37 days, calendar days in trade. So I didn't account for like weekends and stuff. But to give you an idea, we're about 2 days away from expiration. So today's the 2nd. And these are the September 4th contracts. So we had to go almost all the way to expiration, but profit nonetheless. I will take it. I'm happy with it. And basically collected back or paid back at the 15 debit. So not bad. And these were the strikes here. So bought back the 24 strikes, the put strikes, and then sold the 23, which was our protection there. And not, it's something that... So as I've discussed in some of these past trades and videos, most of these will close out sooner. Some have to go almost exactly to expiration. The stock price today ended up closing at $24.57, but when this actually closed for me, it was at $24.37 was the stock price. So only 20 cents less than where it closed, but as it shows, we were hovering a little bit below this for a while, and then we went above it too. So let me show you on Wells Fargo, WFC. You can see when we entered the trade, we kept teeter-tottering above and below this 24 line. So here's $24 right here, and that's where our short strike was at. So you could see there was a few times where we were well above it. Unfortunately, with the liquidity in this stock, it didn't seem to actually decay as fast as some others tend to. And then you saw we crept all the way into the negative. And you just got to keep calm. Sometimes these trades may go against you. That's the point of having a chance of success and trading with probabilities like options allow. And you give that some time for the probabilities to play out. And then today, able to close out at that 50% profit. So not too bad. And then you also notice we got another super duper brand new opening trade for today. And that one is AMD. I'm a fan of most the semiconductors. Even Intel, surprisingly enough. So let me mark that. We should actually look at Intel's chart too. But AMD is a big one. And let's go to Intel for a second. Now, here's the thing is most people are probably thinking Intel is a total dog. Why would you want them? They're basically lagging behind everyone else. But if we break this out, let's go, I think it's like 20 years or so. I mean, this is crazy. So, you check that out. If you held Intel for 20 years, you would have basically been break even January of this year. So if you can imagine all these people holding here all these months and years, and there's just crazy consolidation. And to give you an idea of like their fundamentals and their tech, they're clearly behind most companies. They were sort of a darling. They dominated for years and decades, frankly. There's not a lot of innovation. So this is where they're forced. It's like, hey, are you guys going to innovate or is your company going to go under? And they had a big drop at earnings a month or two ago. And you can see support basically held from the lows. And I was trying to actually enter a trade here when it had dropped, but I did not like the premiums. It just didn't meet kind of the risk-reward profile I go for. And I hated the liquidity. I'm sick of being stuck in like non-liquid trades that you're sort of at the mercy of, because I felt pretty confident it would go up anyways. However, if it in the chance it did go against me, I still want to have that capability to either get out with, a stop loss or some form of a loss, and then also maybe adjust if I really, really have to. So that's where it gets hard and tricky. But nonetheless, in general, I'm a fan of semiconductors, and I've spoken to the Dickens about NVIDIA, about AMD. These are great underlyings to trade so far. So with AMD, we're looking at the 10/16 expiration. We're at the 80 and 77.5 strikes. And our chance of success here in this trade is 73%. And we collected $75 on that call that we're writing. So not too bad. Now let's look at the current stock price. You'll remember 80 is kind of one of our key levels there. And we're right now at 90.22. So not too bad. There's room to run, right? So basically there's kind of a little bit of a consolidatory support here. Call it what you want to. You can look at this chart a million different ways, but here's where some of the price action is. Here's where we're headed, and then who knows what's next, but that's why I'm making a bet with a good risk-reward ratio that I'm happy with. So we'll see. Hopefully that closes out in only a couple days, but if it lasts until October, that's fine with me too. All right, now let's look into some of the overall markets. A trade we put on yesterday in my Adobe, ADBE, wow. Adobe was a trade we put on yesterday, and it's looking pretty good so far. It's above my strikes, which I think are in the 480s or so. I'll have to double check that trade, actually. Let's see. Yeah. 475. So that's pretty good. Okay, so 475 is our trade here. Yeah, I'm happy with that, and the risk reward profile is great. So not too shabby. We'll see how that shakes out. A few others we're looking at is that Tesla life. Yeah, bro. This is kind of funny because in a lot of ways I'm definitely a Tesla fanboy. In some others, I see a lot of risk, and I do not see great premiums right now. I guess if you were looking to short the call options, the premiums are really high, and I guess in a way there's pretty good risk reward there. However, I'm not a fan of trying to step in front of a freight train, especially in this market environment. So I'm not looking to short anything right now or make any directional moves downward. So Tesla's looking good. Battery day coming up later this month. Elon's probably going to go meme ham sandwich soon, so we'll see how that goes. And then DraftKings, big news. MJ, Michael Jordan is a investor. He has equity, and he's also an advisor for DraftKings, which has been the meme stock of the decade, probably. Who knows? DraftKings, DKNG. But you'll see DraftKings is looking interesting, actually, to me. I bet you the whole YOLO crew on Wall Street Bets and all the Reddit traders are probably looking at this one, and I bet they're going full YOLO. It's not bad. I don't mind aspects of this trade. And in my speculative account, I might consider something like that. I just ended up taking some risk off on Snap, which I'm really happy this worked out. So basically, I had sold a call, and this was a cash secured put. Or no, I did not sell a call. I sold a cash secured put, and I bought some calls out of the money. So basically, my cash secured put, which I had bought down here at the $20.50 strikes, has basically decayed well enough for me that it has now funded my calls that are out here at the $25 and $27 mark. So this is great. I basically have a risk-free trade at this point. So even if we expire and we're not even near this level, I end up flat, and I even covered my commission. So that's great. I'll take it. That type of risk-free trade is awesome. And maybe there's some way I can look into DraftKings and take advantage of any upside momentum. I do definitely feel that the current lack of normalcy in this year has really made it so that sports are more interesting. I'm definitely way more into, basketball and football like I used to be as a kid, and then it kind of died down, and I'm way into it again. And I see that same type of setup here with DraftKings. So who knows? We'll see how it plays out, but definitely something interesting to look at. Now let's check out overall markets. SPY up, and very one-sided up, I guess you could say. So a little bit of a bigger move than usual. Unfortunately, the volume hasn't moved much. You'll see the volume down here. There's not a lot of conviction in this market. It's kind of a zombie market. Basically, JPOWs and the Fed is doing a great job, just propping everything up. So, kudos to them. I don't know what else to say. It's crazy in terms of what we're looking at with that. So here's the other one we should maybe consider is the FTSE index. Let's see. FTSE. So this is the wrong FTSE chart. Will it show me the FTSE? I don't think so. Man, let's see. All right, so in terms of the FTSE index, you'll notice it's been flat, no movement. That's a big dichotomy versus what we're seeing, in Europe versus our country and some other countries where everyone's just printing money like there's no tomorrow. We've talked about this at length with a lot of stuff. There's definitely a dichotomy, so it's something to be aware of. It's just the real question is, well, what do you trade? Like, how do you do that? How are you going to fix that anyways? There's not really it's not really a good strategy for cleaning that up. So we'll have to figure that one out. But nonetheless, I think we covered what I'm looking at, what I'm intrigued by in terms of the market. If there's any questions, drop them in. But more importantly, don't forget to like. It's a lot of work, and I really want to make sure we can get some education out there for the younger traders, like my nephews who have become adults recently. And, it's exciting to watch them at least learn. They never really had an opportunity to understand financial markets, personal finance. And so that's really one of the main motivational factors for me here. I'm not trying to sell courses or anything. I just want you to better understand how to take control of your future. So please subscribe. With that being said, my dudes, I'm out. It's time to go enjoy the sunshine. All right. Until next time, thank you. And if I haven't said it already, many thank yous. And I'll talk to you on the next one. Bye-bye.